waiting. I'm just having some issues with the background. But we're live now, so let's just go ahead. We are going to talk macroeconomics and markets. How are they reacting to each other? We'll talk and share a couple of trade ideas. And I'm also here to answer any of your questions. Okay, good. So let's start. So we have had some changes since last week, which I'm sure pretty much well aware of. Something that is quite interesting that is helping stock markets to go to the upside is that there is less talks about tariffs, okay? Less talks about tariffs going from trade wars to actual wars where Trump initiated attacks against the Houthi militia in Yemen. And as well, we have Israel that has resumed its military operations in Gaza. So there's a shift there. I think Trump is starting to realize how his comments and trade wars are impacting the financial markets. Now, there's a big thing happening next week, April 2nd. He calls it Liberation Day. It's something that he coined just a few days ago. And we could have more tariffs happening at that point. But as you've seen on the news now, there's very little talks about it, and we'll see if anything really happens. Yeah, but that's happening, and that is lifting stocks. We talked a little bit about it last week, how markets were slightly oversold, and we could see a bit of a bounce. The way it looks, I think it can continue for a bit longer. We also know that the Fed decided not to do any changes to interest rates. They did, however, reduce their forecast, so they now think that US GDP is only going to increase by 1.7%, while they have upped the inflation forecast, thinking that inflation is going to be 2.7. Now, this is something that we do not want. We don't want lower growth and higher inflation. Why is this happening? Because trade wars, the tariffs are now biting and it's hurting the US economy. But not everything is bad. I'll show you a new set of data we received Monday, which is actually positive. Now, the way it looks right now, the market still thinks the Fed is going to cut 3 times this year, starting in June. So just with the help of that little bit of data, I would say let's be neutral to bearish the dollar and bullish, for example, gold, and also to some extent, a little bit bullish on stock indices. Now, in the case of the Bank of England, they held rates unchanged. Why? Well, wage growth is super strong. Wages are increasing with roughly 6% annually in the UK, as well inflation is quite strong as well. We're talking about something called service inflation, which is something in particular. Now, there is headline inflation, which actually dropped from 3% to 2.8. We'll talk about that in a minute. And that is actually slightly GBP/USD bearish. But as you will see, for now, I think it makes sense to be mildly bullish on the British pound and then really bullish on the Bank of Japan. Why? Because a headline inflation and core inflation is too strong in Japan, all right? Way too strong. Wages are increasing fast with, I think it was 5.5%, which is pretty much the same we saw last year. But the Bank of Japan, they are very worried about growth. And what's happening is that inflation is starting to take over and become more and more dominant. And I think they're behind the curve. That effectively means that they're acting too late. So I would say we want to be really bullish on the Japanese yen. Now, let's take a look at some of the latest data. So this is data for the US, and this is actually really good. So this is the composite. So that's the combination of manufacturing and services. And as you can see here, this index pushed to the downside. But now it went from 51.6 to 53.5, and that's a 3-month high. And part of this is also the flash services PMI, which is the same index that actually caused the stock markets to drop last month. And what this is telling us is that we're actually not doing too bad. It tells us that we can actually be bullish again, that the economy is holding up relatively well. And we'll probably see some decent growth, roughly sort of at least 2% annualized. Here is for the UK, and the UK here, look at this. It went from a low 50.5 to a 52. So last year, this index was dropping, and we even had negative growth in the UK. But since then, the Bank of England has cut rates a bit, and now this is starting to push to the upside. So despite the problems we're seeing in the world, the UK economy is accelerating. This is another good reason to be bullish on the British pound. Despite here, this is inflation went from 3% to 2.8. Now, this is just one reading of inflation in the UK. You have service inflation, which the Bank of England worries about more. But the fact that they didn't cut, okay, the fact that they want to wait, the fact that wages are strong, the fact that inflation is still quite strong even though it dipped, and the fact that PMI is pushing to the upside says to me that we should probably continue to be bullish the British pound, in particular maybe against the euro, because this is what happened with the PMI in the euro area. So the PMI in the euro area did lift a bit from 50.2 to 50.4, which is a 7-month high. So it pushed a little bit higher, but this will typically not result into very strong economic growth. Now this is quarterly figures, so it's not really the same as we saw in the other ones. But in other words, here the UK is, from an economic point of view, it's not really moving too much right now. You may ask, so why is the euro up so much then? Well, because the German government is anticipated to invest and spend a lot of money, and people are buying now because they think these numbers are going to come up and be higher in the future. But right now, this I would say is probably more neutral, the euro, more than anything else. So what can we look forward to this week? We have jobless claims coming up tomorrow. You can watch that, especially as Trump is anticipated to reduce government headcount. But we haven't really seen a major impact on the data, but this is where you're going to see it if it turns bad. And then you have core PCE price index. Now this is the core PCI price index. What you can see here is that inflation was really strong in the US at 2.9%, but then this dropped to 2.6. So you can clearly see here a nice trend shift in the data. And this is another reason to actually be bearish the US dollar and bullish, for example, gold. So how about the charts? Let's load the charts. So this is the euro versus the USD. So we had this push here, and we pushed all the way up, and you can see here we had a failed, we breached this high, but then failed to swing above it, okay? So we had that little push, failed to push much higher. And the reason for it is that after such a strong move here, you really need that correction. Now you have some of the data like the PMI from the euro area not being that strong. And then as well, you looking at the fact that the vote on this infrastructure deal in Germany has been voted in. So quite a few things are being priced in. So there's two game plans here, or three really. So one, which I like the most, is given that they are looking to spend much more, I would prefer to buy a breakout on 109.57 here. Can probably lift you all the way up to 112. I think that makes a lot of sense. The other alternative, which is what the banks are recommending their clients, is to look to be bullish down here on a dip. So they're looking for an uptrend, but they're looking for a far weaker uptrend where you would look to sort of buy at lower support. The last and the third one is you could technically be bullish above this level, but I wouldn't really trust this level too much. In the case of the British pound, let's take a look at this. This is the British pound. So we're looking here at a market which is really difficult to say what's going to happen next. You see here, there's not too much happening. We're sort of stuck in this big range on the daily. We have, of course, a bit of a bullish bias. And if inflation keeps on softening in the US, then probably down a bit to maybe 127.16, and then people are going to be buying. Alternatively, they look for a break to the upside. So what you really want to do is maybe look at something like Euro GBP. If you look at something like Euro GBP, let me see if I can find this one. Then you do have more of a bearish bias here. In terms of oil prices, so they're up quite a bit here. The reason why this is up quite a bit is because the US has decided that from April 2nd, they will add tariffs up to 25% on anyone that is trading with Venezuela. That is probably going to hit China. The thing is this though, they already have tariffs that are right now at 20%. So the question is, are they just going to push it up to make it 25, or are they going to add 20 plus 25 so you end up at 45? And then you have some countries that you don't really think about too much, but Italy and Spain actually import quite a bit of oil from Venezuela. I don't think they're going to be hit, but that could be something. Um, I think Trump is literally just trying to pressure Venezuela to receive more of its population. I don't know if you saw the news, but there was um, over the weekend there was news that the former government, they issued um, temporary right to stay in the U.S. under a specific program. Now that has been cancelled, and it's impacting about 500,000 people, and a large chunk of that, maybe some 200,000 of them, are from Venezuela. Maybe he's trying to pressure Venezuela to accept more of their people, and that's the reason why we're having the current situation. Anyway, uh, we're having a bit of a bullish bias. You have economic growth. I just showed you in the US up and in the UK up as well. Um, this is obviously influencing things here. And maybe if one is lucky, one can have a bit of a dip. But I think we're dealing with, and then from here probably up. I think we're gonna deal with this probably, you know, doing something like this. I think maybe up to 74, and then maybe 76.77. What's gonna happen afterwards? Are we gonna go all the way to the other side of this pattern? Right now, I don't think so. Things are still a bit fragile. How about gold prices? So gold prices, this might remember we talked about buying here for this to turn bullish. We reached that target. We're now waiting for a corrective pullback towards, I would say something like 2,559 all the way down to 2,906. Okay. Also, in the case of the Nasdaq 100, so we have now pushed. So we pushed up to this level, and let me just remove these lines. So what's happening here is you're starting to see your first sort of negative day since a while. There's so much resistance here, and you have the 200-day moving average. So it's now testing the lows. I was going to test the downside, and I think here, at least for now, we do want to be buying dips. You just want to be buying dips from lower levels, I would argue. Maybe something like this, and then stops at 19,360. So probably from here, this little spot is roughly 19,797. So you might say, why should we do this? Well, one of the reasons to do this is that, again, the PMI data, which I just showed you, proved to be much, shows you that the US economy is holding up. The PMI data, which was actually weak last month, is now good again. Jobless claims is stable. So we're not, the situation is not as bad. And then Trump, again, not too much into tariffs anymore. And that might change next week, but we'll see exactly. Even if they push it up, it's not going to be too much. Let me explain what I mean by that, okay? The reason why I explain that is because it's looking to, if in the case of the EU, so the EU has 10% tariffs on US cars. The US has 2.5% tariffs on imports from EU to the US for autos, okay? So what they want to do is that they want the EU to lower their tariffs so they are at 2.5, exactly like the US. So the gaps we're looking here, they're not that crazy. And if you look at something like the EU, they have sort of average tariffs around 5%. And, you know, there might be some impact, but it's not going to be as crazy as 25% or something like that, unless he starts to make it a political thing. And in the case of Bitcoin, so this is Bitcoin. So you can see here, really capped by that trend line. And this is good because we're now creating a swing high, sorry. And I think the next time we break above the trend line and break above this high, I think that could be more interesting. It sort of depends. Ideally, this goes down a bit more, so this becomes a more pronounced swing high, and then we look for the bullish move. Because at the same time, yes, I told you the data and everything is looking better than we thought just a couple of weeks ago, but nothing really suggests that we can have a massive move to the upside. We're not seeing here Trump saying, okay, no more wars, okay, no more trade wars, and we're not seeing him saying we're gonna cut personal income taxes. I'm not seeing him doing anything that stimulates the economy. If anything, now cutting down on government, putting trade tariffs, that is actually bad. So until we get that gone, I really can't see this turning around. Reaching say 110k. So I want to. Well, I'll take that back. All of what I just said does not have to happen, but we're not seeing any push towards any of these factors that I just mentioned. So with that in mind, I would lay low for this one here. I wouldn't go out and short it. If you really want to short something, then you're looking at something like this. Look at that. This is S&P 500. So we're getting a super clear rejection as the 200-day moving average, and you have all these lows here that were limiting price or supporting price, but it's now limiting price. And this is really super straightforward. This goes down, probably down again, and then we can buy to the upside. The alternative, let it go down and then just wait for the break here. And that's it really. That's what we have to cover for today's market update. Now let's open the floor. Let's see if you have any questions. I'm gonna jump on Twitter first to see if you have anything there for me, and then I'm gonna jump on YouTube. Okay, so we don't have any questions today on YouTube, on Twitter, which is all good. Um, I can check this out in a few minutes. I'm gonna jump on YouTube. Good, a lot of people here. A lot of comments as well. Hello everyone, hope you're doing good. We have SEDA-FX. We have so many names, and I'm terrible at pronouncing them unless they're well, even English names I struggle sometimes with. A lot of people here anyway. Hello everyone. So we got a question. What do we have to say about quarterly ending? Why are we having choppy price action in indices? Yeah, so usually around quarterly endings, option expiries, you tend to have a bit of choppy price action. Now, it's not that important. Well, it depends on how you operate. Me, because I'm more of a swing trader, I don't pay too much attention to it, to be honest. But yes, sometimes what happens is that the market is sort of hesitant, doesn't want to do things as people like the market makers are defending, say, options that they have in the market, and people as well are defending their positions. So they don't, if the price goes too much to one level, they try to push it away. But it's very difficult. It's very difficult because you don't know exactly what's happening. Some banks, most of the time they're neutral. They don't actually really care too much. Nobody sits there on a huge amount of risks unless you're like an actual speculator. But it's difficult to say. But yeah, it does turn a bit choppy, and then afterwards you get some slightly clearer price action. Now, I don't know if it's this Friday. It should be this Friday. You see, I don't really follow too much. There's some people that have turned into a science, and they be like, oh, these are the different option levels. But I never really been able to puzzle the option levels to market price action, at least now for big markets. I do know that there's some people that sell dashboards where you can see like options in certain sort of individual stocks, and then you can use that information to get like an idea of what's going to happen. But that the problem many times is that, say if someone is buying or someone has bought a lot, and then they just buy puts thinking that the price is going to go down. Is it a hedge? so they don't really care what's going to happen, or or is it someone that is just buying puts and then looking for the price to drop? So you see the complexity here. We don't know, the quality of the signal is not too good. But yeah, some people would look at it and say, oh, something's going to happen. But that's as far as you can go with this, I think. I would say the reason for GBP/USD to trade to the downside today is because inflation, which was this morning, is lower than expected. Okay, so it's lower than expected, and that of course causes some profit taking. Because if you look at this, people that have been holding that bought a breakout here, or even bought a breakout in Euro USD, they're sitting on some profits. So they are sitting here, and it's the same thing with GBP USD. They're sitting here, and if they bought at lower levels, they need to ask themselves, so what's gonna be the next thing? Why should I hold on to this thing? And the Bank of England has done it quite clear. They're not gonna cut rates right now because labor market is strong, wage growth and service inflation is strong, and on the other hand, now you have headline inflation that is slightly weaker, and that's usually a very good example of booking profits. And also, it's good and it is bad. One big issue with trading forex is that forex will usually correct maybe half of the move. Okay, so to give you an idea, you have a very strong move to the upside, and then you have a very strong drop, and then you have a strong move, and then you go back, and then you have a strong move, and then you go back 100%. So this is very typical. It doesn't necessarily change the big picture. So if this goes down, if you just look for this from a technical point of view, if this goes down to sort of 127, that from a technical perspective wouldn't be unsurprising. Can you go and can you short this? Yeah, if you wanted to, you could short this. But that's where you need to ask yourself, do you want to fight the dominant trend? So some people, they don't mind to fight the dominant trend. Me personally, I don't like to fight the dominant trend because when you fight the dominant trend, you usually get stopped out. So what do we know? We know quite a few things. Like given what I told you before, realistically, gold will keep on trading to the upside. So you do want to buy gold in a dip. GBP USD and Euro USD can also be bought at dips. The difference here is that, are we going to trade higher than 134? Probably not. Is gold maybe going to reach 3,200 or even higher, even more? We know this as well because if you look here and then you look at US CPI, so we inflation adjust this. So this is inflation adjusted. We have the old all-time high from 1980 and it's at 11.35, and from today's level we can reach, it's another 19% upside until we reach the old all-time high. And then you have sort of some big patterns here, big targets. So we have an unmet target here at 99.85 and that is 4.2% higher. So if we go here to gold prices today, 19% is at 3,620, and 4.5% or 4.3% is 3,147. So I definitely think there's more upside here. I think this is one of the best sort of setups here. Yeah, there's going to be a lot of spending on defense in the EU. You already have some, I can't spell it. So you already have some stocks. So this is the German stock. They produce tanks, okay? And you can see how they literally soared on anticipation of this. So from being sort of rather quiet here, from sort of this year, They're sort of up with 127%, a bit higher. The question is, what's going to happen next year? You know, is this going to keep on pushing to the upside or not? I don't know, because I'm not like a equity specialist. I don't know if the valuations here are good or not. So I wouldn't be able to tell you. But yeah, there's going to be much more spending going forward. Hello, everyone. Thanks for all the hearts. So what pair are you trading? So I'm actually laying low right now. I haven't taken, well, I'll take it back actually. I did buy some Nike stocks, okay? Uh, I bought some Nike stocks last week on the drop here. They had earnings. So Kim Kardashian, she's launching a new thing with Nike, which could potentially be very interesting. And it sold off though, but I hold it just for a little while because I was, you see this, we had this big gap and we had the break, and from sort of oversold conditions, it looked like we were gonna push back into and fill this gap. We didn't fill the gap, so I actually closed it out yesterday. But I'm laying low for now because I don't really see too much activity that I like a lot. I am watching crypto, I'm watching everything of course, but there's nothing here that really encouraged me right now to be super bullish. And if someone put a gun to my head, I would say buy gold. If I trade news, yeah, I trade news. It's not as easy, but you can definitely trade news. I like it when, for example, you have a consolidation or you have an otherwise good technical pattern. So, for example, you have price trading sideways, and then you have something like this, and then you have news that suggests we're going to go to the upside, and then we're about to have the breakout. Then I will usually buy, and then we go long or short depending. So yeah, I do trade the news, but I don't necessarily do it like, I don't necessarily load my calendar and be specifically looking for things, but I do trade. Like, for example, I think you did the same. Like when you had the US election, for example, when it looked like Trump was going to win, I bought Bitcoin here and a bunch of other stuff. And I had this period here from November all the way up until Jan. It was one of the best episodes money-wise I ever had. So yeah, I do trade with the news, but not consistently. If I use a trendline strategy, I use trend lines to help me understand. I also use it primarily as well for explaining to people. But at its core, the issue with the trend line is the following. The trend line is going to give you the direction, but it's also giving you the speed of the trend, okay? And the speed can actually change, okay? So that's an issue because, for example, you can have a trend line and then the price breaks the trend line. And if you look at what people say in the books, well, you should turn bullish now. But it's not always like that. It could just be that the trend, the down move in this case, for example, is not as strong as before. So the best thing is actually just to learn to keep track of important highs and important lows. Sorry. So the most important high right now, if we're using Bitcoin like example, is this one here. And this, if this breaks below this level, this is going to be the new swing high, okay? Because now in the short term, we're sort of guided by this uptrend. So in the short term, we're actually still in an uptrend. There's nothing that says that we can't do this, okay? And then you can use what's called multiple time frame analysis when you combine the shorter term with the bigger picture. So here, for example, is a situation where is not according to multiple time frame analysis, is not advised, because here the the dominant downtrend, well, it depends, but if this is from January, right? So that downtrend, so a couple of weeks, that downtrend is bearish, and then in short term we're bullish. So that's sort of a no-go. So you actually want to wait for these to align. In the case of gold, for example, you have a big picture uptrend, but in the short term you're trending sideways to bearish, at least from this point of view. So at its most basic, you have this high here, and then you have this high here. So you're now in a downtrend. And multiple time frame analysis suggests, well, you shouldn't be trading this. You should be waiting for this to turn bullish, which I personally think is going to happen down here. And if it doesn't happen down here, it might trade sideways here for one point and then push to the upside. The PMI shows the weekly direction. The PMI definitely helps, okay? The PMI definitely helps because, like, more institutional traders, people that hold position, people that dominate the long term, they will bear that in mind when they're putting positions on. I do that myself, and I've been in the industry since 2005. And I used to work at Swedbank Markets, which is Sweden's biggest bank. And I used to work at the fixed income and FX desk. So all of these big banks and all these companies that we used to deal with, but also in London where I was based, they will look at this data and they're going to be like, because they don't try to trade short term. That's something really important to understand. I'm talking about not speculators necessarily, but I'm talking about more swing, people that have to hedge, people that move a lot of money, but they're not necessarily looking to trade the short term. So they need to pay salaries somewhere, so they need to convert pounds into dollars, or so on. And these guys are looking at the bigger picture. They don't try to time what's going to happen in the 5 minute and so on. And that's as well why it's actually much more difficult to trade in the short term. Okay, so let me give you a bit of background. Like, what would happen is that we would have people calling in. So they call in, they want to buy for a big amount. And then as a dealer, I used to process that trade. So obviously we try to process the deal in a way that we don't move the market around. But sometimes you just move the market around. So sometimes what will happen is that you're looking at a 5 minute chart and then you see a breakout. But then after that breakout has happened, nothing happens. Why? Because it happened to be like a big fund or a big company that just needed to get hold of currencies. And they don't really care that they pay a bit extra on spreads. And then you have a push, and then the price just falls back. And that's the problem with trading very short term, that you have a lot of these flows. Now, I have another friend that used to work as a stockbroker at a big US firm. And they were a bit sneaky even, because the company wanted to buy stocks. So then they're going to be like, okay, we're going to buy stocks. But what they used to do is that they used to be like, buy loads. So they just buy, and they just push the price up. And then say they need to buy 10 stocks. And they push all the way up. And they know now that, that they have pushed the price all the way up. So what they do at the top, they short. Because they know that the price is probably going to come down now because it moved up too quickly. And then when the price comes down, they will book a bit of profit on that. Does that make sense? So there's a lot of that kind of manipulation, but that's in stocks a couple of years ago. I'm not saying the same thing happening now. It's much more difficult to do that, say on GBP USD and Euro USD, but it does happen in the short term. How often do you swing trade? So it really depends on what's happening in the market. I personally, I think I told you guys before, I follow 6 patterns: rectangles, head and shoulders, bullish and bearish, and then you have ascending and descending triangles. So I have those 6 patterns. Ideally, the pattern is a couple of weeks old. And what happens many times is that the markets start to turn a little bit boring, like has been happening recently. And then you start to get break out in one thing and then break out another one and break out another one. So sometimes it can be like you open several positions in a week and then I hold this for a couple of weeks. And then sometimes it could be nothing. Um, the key challenge, what you need to learn in your trading, is to know when your system is working good and when the system is not working good. So what's going to happen is that when it's not working good, you start to lose money, right? So what happens at that point is that you need to sort of know, okay, when have I lost too much? When do I need to, you know, step back? And you can look at your equity. So you can take your returns and you can map them, and they're gonna look like this if you're doing good. Okay. So your account is becoming bigger and bigger, and then you're gonna see at one point, if you're really lucky, you sort of manage to get out at the highs each time. But at one point, you're gonna start to trend to the downside, and that's when you know you need to take a break. And that's late, and so that's super important. And right now, the market is not really being that interesting for me. Um, the problem with stocks trading, personally, what I think, I don't really trade them too often, is that they don't move too much, and it's a bit boring. So some people say stock trading is hard. I mean, it depends, you know. It's interesting because you can have a stock like Nike. I think everybody buys stuff at Nike, right? But Nike's down quite a lot. So they changed the business strategy, but they're down quite a lot. So they're down with sort of 63%. I don't really trade stocks too much. You know why as well? Because again, it takes long time. You need to read up on the company and understand how it works and whatnot. Uh, Whereas I like to trade sort of crypto, as you can see, and trade the big markets as well, and indices. And then if you have leverage, you can get some good returns as well. Okay, let's see if there's any more questions. There's a lot of comments here. I really like that. I really enjoy that. Don't forget to hit that like, guys. I'm doing it myself now. Which is better, lower time frame or higher time frame? So if you're new to the market and you're struggling, we know that 80% of our colleagues, like people that trade, don't make money, right? It's okay to do short term, but just the benefit of doing short term is that you learn quicker because you just have more experience. But the problem with trading short term is that it as I told you, there's more random news. So if you in my case, at one point I spent so much time trying to learn the short term, and then I said like, oh, I'm not making consistent money, and then I said, look, I don't care now. I'm just gonna trade slightly longer term, and even if it means that I make less money, because obviously when you trade short term, you have more opportunities. In the beginning of the week is bullish, by the end of the week is bearish, you know, and that's maybe just in one market. If you multiply that, you have more options. The problem is that it's much more difficult to pinpoint, you know, the up for the first 2 days and the down for the second days, right? It's much more difficult to pinpoint that. So in my case, I came to the situation where I said I invested too much time on this to give up on it, and I just want to be profitable now. And now I hold positions for longer, which means that I miss out on trading to the bullish side in the beginning of the week, and I miss out on being short by the end of the week. But maybe on the second week, the market goes a bit higher as I thought it would do, and I go out with a smaller profit. But it's much nicer to have money than not to have money. So you need to make a decision there on your own. It's really good to learn fundamentals and technicals. Um, an easy way to learn fundamentals is just find yourself a good newsletter. It can be FX Street, it can be something else. Um, I prefer going to the banks. So there's a company called Danske Bank, which is the bank, and they offer content for free. They have a daily market update. They don't tell you nothing about trading, okay? They have some trading stuff, but ignore that. Just look at the daily market update. ING Bank as well have a daily one. And just go there and you learn the macroeconomics, the fundamentals, and then you just look at the price. Okay, these guys said that this happened yesterday. What happened with the price? And after you do that for a while, you start to see a pattern, because there's pattern in the price for technical analysis, and then you have the pattern in the fundamentals and how the fundamentals react to the price. Now, you don't have to know fundamentals, but I find that for me it helps. It helps me because I can see, for example, oh look, for example, for me it was very clear. I mean, it was super clear. You should just buy as much crypto as possible when Trump won, because he wants to liberate the crypto market, right? That's very easy. So when you know that, and then you have a technical setup, you feel much more confident that you can just buy loads of it and have some really good returns. Okay, so I do think it's good to learn fundamentals. Yeah, it's a very good point there. Um, we have a question here about the patterns. Then you get trapped. Yeah, so that's exactly where I am right now. So I was just buying breakouts of the breakouts and breakdowns of the breakdowns, and I was literally just losing money, losing money, losing money, um, and that's when I took a break. And I'm in a break right now, and I think this gonna be. I trade like this Nike position is very little money, but it depends on what you want to do. Yeah, it's always good to have more than one strategy. So the false breakout. So what usually happens with a false breakout is something like this. Let me see. Let me see. Where do we have it? So for example, we have a range which is like that. Okay, and then the price is trading sideways, and then you're thinking that it's gonna break, and then I would buy here, and then it goes down, and then you get literally stopped out around here. And it is possible, it's not always that it happens, but it is sometimes possible to wait for this to actually go down, and then when it goes down you sell, because then you might go back to sort of half of the range, and sometimes you go all the way down to the other range. So you can have very high success rate. The problem is the risk to reward ratio there. So long story short, you probably want to have a range bound system, and then you want to have a trending system. I am being a bit lazy. I only have a very good breakout system, because I know that trading ranges take a lot of energy, and you can spend a lot of time, and they can last for maybe 1-2 years sometimes. But the thing with that is that whenever I have a breakout and we have some really strong markets, whatever I didn't make when it was ranging, I make that back like tenfold. What do you think about having a trading plan? Yeah, you definitely have to have a trading plan. You definitely have to have a trading plan. If you don't have a trading plan, you lose. Just give me your money. Give it right now. I'm not kidding. If you don't have a trading plan, you will lose. You might be lucky, but realistically, at one point, if you're trying to trade, you're gonna lose. If you just buy Bitcoin now and you don't have any leverage, or you just buy the S&P 500 and you just leave it open for months, yeah, you would probably make some money. But otherwise, there's a high risk that you're gonna lose all your invested money. So what do I mean by a plan? You need to have a system that tells you when to enter, when to book a profit, and when to take a stop loss. So you need to have that, and you will never find a system that's gonna give you everything. You know, you're not gonna have a system that's gonna let you enter here and then you get out at the exact best exit. You're never gonna find that. But you can do back testing and analyze the markets. So then you know that okay, if I always buy here, if I do this 100 times, and then I book profits at 2 times my risk, I'm gonna make money. And if I do that over 100 times or 50 times at least, I'm gonna make money. And that's what you need. So you need to nail that down. You need to know it by heart. Even without thinking really, you already have to have an idea. So you can use something like, some people will just analyze here manually. You can use like the replay function as well. I don't really use it too much, but you can use it. So you do something like this, and then I think you just click here. Yeah, you click here, and you practice on this data. As well with Think Markets, they have Traders Gym inside of Think Trader, which is the same function. Trading during ranging markets is fun. I don't really enjoy it too much, but everybody's different, okay? I like it when it's explosive, like you buy and then up a lot, or you know, maybe small loss. But some other people are super chill, like they don't like that, and sometimes you're forced to it. So I happen to live in Europe, which means that I have always traded these volatile markets, okay? But I have colleagues and friends in Hong Kong, for example, in the Middle East. I have friends as well in Latin America and in the US. And for them, range by markets is what they have. So they develop systems that scalp, for example, grab a couple of pips here, grab a couple of pips there. Whereas in my case, because I was born in Sweden and I started trading when I was living in Sweden, I have always had these explosive markets. Good question. After how many years did you become profitable? Okay, so it actually took me 8 years. 8 years. The reason why it took me 8 years is because I was trying to trade on the 30-minute. I was profitable under certain periods before that, but it was first when I said, okay, forget about the 30-minute, look at the 4-hour, 6-hour, and daily. That's when I turned profitable. And since then, I've been profitable many years now. So there's a person here that says, I always lose my funded account immediately. I immediately go into 4% drawdown. So, sir, Silas. So Silas, you told me before, you know, if we need to have a plan. So I think that's where you're failing. You need to have a plan. And if you have a 4% drawdown, you need to trade with smaller position sizes. Okay? So you need to trade with smaller position sizes where you can build a buffer so you're allowed to take bigger drawdowns. Okay? So that's what you need to do. So, for example, if you have a 4% drawdown and you want to trade 4 times, then you can only take 1% risk per trade. So you need to buy a smaller size, so you can take 4 losing trades. Okay? Because if you just open one big position and you have too much leverage and the market just moves against you a little bit, you'll blow up. Yeah, to be honest, 8 years is a very long time. If I knew it was gonna take 8 years, you know, maybe I would have thought differently. Okay. I don't regret it now. I don't regret it at all. Like you become better and better and better. Okay. When I started trading, we didn't have prop firms. I had like 2,000 euros that I was trading with. This is in 2006, and now I have much more money than that. And last year I had such a good year that, literally I don't have to work. If I don't want to do anything, like I don't have to be here, for example. Like I have that kind of money. But it took a very long time, so I don't regret it. But yeah, 8 years is a long time. I could have maybe learned to do something else. But what can you do if you want to cut it down? What can you do? Well, just don't trade the short term. Work with signals at least in the 4 hours. And if you struggle with the 4 hour, use maybe 6 and 12 hours, okay? Something like that. Because when you have a breakout on a daily chart, it will usually work, okay? Or if you have an uptrend in the 4 hour or the daily chart and you buy a dip and you put your stop loss at the right level, it will probably work. But if you try to do the same on a 4 or 5 minute chart or even a 30-minute chart like I did, it becomes much more difficult. So trade bigger time frames. You can always go down. Remember that. You can always go down. Okay, we're going to wrap things up. So okay, we're going to finish one here. We just take a couple of quick questions. How do you stay disciplined? Okay, so this is how it works. There's a cookie jar. And you put your hand in there because you want to have a cookie. And then someone comes and slaps your hand. It hurts. What's going to happen is that you're going to do that so many times that at one point you're going to remember. Some of us remember very quickly. Some of us do not remember very quickly. Like I know now, I've been slapped so much times because I was like trading stuff I should not trade, that I don't do it. And if I do it, I talk to myself and say, Alex, what did you just do? This is a stupid idea and you're holding too much risk. That's how I speak to myself sometimes. And you're just gonna lose. And then I'm speaking to myself, I'm like, yeah, you're probably gonna lose. And then you say to yourself, okay, I'm just gonna hold on to this for a little bit longer. And then like, oh, I told you you're gonna lose. And then you'll be like, okay, all right, I'm gonna close out. Sometimes that happens, okay? Sometimes it happens. But thankfully, as you do this more and more, it happens less and less and less. And the money I'm losing now is much smaller percentage-wise to what I was doing before. Now, some of us are really stubborn. It takes longer time, but I am very stubborn. So there is a chance and hope for everyone. How do you control your emotions when trade goes against you? That's also a process. So you need to learn to, when you have experienced this many times, at one point you're going to feel detached. It's just another day of trading. That's another reason as well why I don't trade too much short term, because I can't bear the fact that you win, you lose, you win, you lose. I'd rather buy a position, hold it for a couple of days, and then the cycle of winning and losing doesn't impact me too much. Then I don't know what's with me, but I'm very good at this. As long as I have one good night's sleep, most of my troubles are gone. Okay, so I can have a losing trade today, and then I'm gonna be a bit moody, or a bit upset. But then I sleep, and I wake up in the morning like if nothing happens. And everybody's different there. Some people are very emotional from that perspective. I am not. And that also means that some people are not built to trade. If they cannot control their emotions, if they can't be disciplined, for example, they're not built to trade. And then you have other people that are like machines. They don't care at all. Those are the ones that are best. Because, they're best at that. They probably have other problems at home or with relationships. But that's another issue. Okay, all traders. I want to thank you so much for joining me today. I hope you found this useful. I'll see you next week. Next week is also going to be a special day. It's going to be Liberation Day, so we're going to have a lot of news from Trump, maybe at the same time as we're speaking. We'll see. In either case, I want to thank all of you for joining me, and I hope you have a great reminder of the week. And